Well, we see a continuation of the broken record. Actually, it's not very broken as far as the averages are concerned. They just continue to trend higher. I'm just looking at the NASDAQ right now, and if you also look at the S&P, and you can just see essentially you could draw almost a straight line through the pattern that has emerged since January 2nd of 2013, when the Fed made it clear that they were going to continue the quantitative easing process and, in fact, step it up. And so all these major central banks around the world continue to print, and currencies ultimately will erode in value as a result, because you can't get something for nothing. But meanwhile, hard assets, various, let's say stocks anyway, that are getting propped by the quantitative easing effect, are doing very well. Bond yields have been, of course, at all-time lows, but there's more risk perceived to be in bonds these days, and money tends to want to flow into stocks. So that keeps a floor under stocks. And the correction, the largest correction we've seen in the major averages, has pretty much been contained to within 5% and change. That's about it, and it's not surprising, when you consider all the manipulation going on. Bonds pose more risk simply because you have the effects of countries like China, who hold $1.3 trillion in treasuries, U.S. treasuries. They are the biggest holders of U.S. treasuries, and they did make the announcement recently, which is quite seminal, in that they are now no longer going to be net purchasers of U.S. treasuries. So that is potentially very problematic, because if the demand for U.S. treasuries drops, then of course that means that yields go higher. If yields go higher, then the U.S. debt, which is already beyond massive, becomes even more so. And there's perhaps going to be a day of reckoning at some point, but calling a major market top is anyone's guess. I remember in 1997, a lot of people were calling for a major top. Even Greenspan came out and said, he gave his famous irrational exuberance speech that stocks are well overvalued and things were out of control. But we all know that the actual top didn't occur until March of 2000. In fact, some of the best gains, I think, in the last 100 years were made between 1997 and March of 2000. So all that's to say, it's always key to pay attention to the price-volume action of the major averages and leading stocks. That's what we've been doing for many, many years. Probably looked at millions and millions of charts by now, since I've been doing this since, I was a little kid. So at any rate, it seems like all systems go. We're in an uptrend, and pocket pivots have been working well. We have a flurry of these things since this year began, and that all bodes well for the internals of the market. Gil?
Yeah, to me, it's 2014 started out the way 2013 pretty much was, and my tactic of coming in heavy when stocks are quiet and setting up, and then selling into the rises, as far as I'm concerned, it still seems to be the way to go. And I'd have to say has created a very happy new year for me so far. But knock wood on that, it's still earlier in the year. I still have plenty of time to screw things up. But in any case, I think getting back on track last May and changing my tactics drastically, getting away from position trading, using this sort of ugly duckling theory in combination with roundabouts, buying on weakness, buying heavy, going short on a tactical basis when opportunities presented themselves. Last year was actually, the way to go, and it worked well for me. And I think if you're just using a plain old vanilla, position building system, it's much more difficult. And, people can tell you in hindsight what was a great strategy to use last year and or what stocks you should have had. It's all easy in hindsight, but when you're trading in real time, you have to have a method for making money in real time, not trading in hindsight. And people can tell you that, 2013, you could have just bought an index fund and been up 30-something%, and that's true. But you only know that in hindsight, because anybody who bought an index fund in 2008 and held it throughout the year could have ended up down, 40-50% or more, or even a mutual fund where people were down 70% or more in 2008. So, the market is a multifaceted gem, so to speak, and I think there are different times when different strategies will work better, and I think as traders we have to try and adjust to it as best we can, and I think that's going to be the key in 2014 going forward. So to me, the markets, you had a nice start to the year, well, not a nice end to the year, I should say, and then we came down 3 days very quickly. NASDAQ here, tested the, excuse me, testing the 20-day here and then bouncing right back up. So, you had some big distribution here on this day. So, things are looking grim, but of course, we're operating according to the ugly duckling theory. And so when things look the grimmest, the market turns. You see volume picking up. Yesterday, I believe, I think we're roughly flat the day before, which would have been Tuesday. And you're higher. Now you're pulling back. You try to go to a new high, but you run into some selling, so you're reversing today. Let's see, Dr. K, we're running heavier volume today. We are running, well, lighter right now on the NASDAQ, heavier on the NYSE. But the S&P, is underperforming the NASDAQ. It looks like you might have some rotation out of bigger cap names and into some of these smaller cap growth names. So all of that looks constructive for the markets, but I don't think it really shows up in the indexes in any big way because the NASDAQ isn't powering the new highs the way some of these stocks are. So it's really been a matter of using pocket pivots recently and coming in when these things are quiet. Stocks that I've been long over the past few days to start at the new year. There's YY with a massive, almost a 15% move higher. Cena had a nice move, but it comes to the top of the base and heads lower. Solar City, a couple of gap ups, but here are the pocket pivots right in here when it was very quiet, around 53 or so, and stocks run up, breaks out on a gap up, hangs up for a couple of days, and now it's going higher. Somebody emailed us today and asked us if we were worried that Solar City had gapped up again today, and there were 2 gap ups in the pattern over the last 4 days, and whether we were worried about that. Number one, I only get worried if the stock has a gap up for the second time within 4.6873 2 days. 4 days is not long enough for me to start getting worried. No, but seriously, since when did worry become an investment strategy? Yes, I'm worried, and you should sell all your stock right here. I don't think there's any studies that show anything other than the fact that here's your Bible gap up. You hold, it tends to be volatile stock. I think you come down, less than 1% through the low here, 63.04. The low here is 62.65, so you're like 1% lower. Yeah. And then you turn and bingo, you go higher. And it's going higher. So volume's up. I don't know. Maybe I'd be worried I'm making too much money on the trade or something. I don't know. But worried? I don't know. A lot of weird questions that come our way like that. Someone else today was asking me whether, financials acting well. I know it's like this MTB Bank. I always watch that one. Citigroup's been acting well. Goldman Sachs, relatively well, but not really a bank. Wells Fargo's been acting reasonably well. So, financials are acting well. And, the question you get, well, should that be good for the market? Doesn't the market act well when the financials are acting well? And, to me, that's like, it's like my favorite song, Anyways, I just had to play that to start the year off. But it's kind of like that, It's like I'm not watching whether all these planets are aligning and whether this and that is occurring in the indexes or bonds are doing this or gold is doing that, and all this extraneous BS. And to me, it's like watch the setups, look for the setups, look for the buy points, come in heavy, sell into the rises. And so that's been critical, I think, in stocks. You got YY, Cena. Let me see if I can make these a little more coherent looking. There we go. Yeah, I mean, these are, to me, you run up, like this, and you're entitled to a nice sharp pullback. Of course, anybody chasing strength the last couple of days is underwater now. YY has been a good one. We saw Kihu. Again, yeah, Kihu was tight in here, and I actually thought it looked viable in here. And on this night, 2 nights ago rather, I had written down on my list of, I go through my stocks and I look at things that are trying to get tight and might be setting up to move, and Kihu was flashing at me, and it was very tight in here. You can even see on the weekly chart, very tight action along the 80 level, I guess. And so, I'd written down you buy this, and of course, yesterday it gaps up. I would have rather have been into it and then think about selling into the gap up, which goes to the top of the base and now runs into a big reversal today, which is actually pretty ugly looking as far as I'm concerned, which points out, if you're chasing strength, you run a little bit more risk than if you're anticipating strength and buying into constructive setups. So, to me, Kihu wasn't coming out of the base, not happening. Taser, same thing, coming to the top of the base, comes straight up off the bottom. But again, here's the ugly duckling theory at work. The stock violates the 50-day moving average. Here's a 50-day moving average. You see it violates, it closes below here, then goes lower. So it's long ago violated the 50-day. But it never violates the 65-day exponential moving average. And when it's looking the ugliest, the thing turns around and gaps up like a beast and right up to the top of the prior base. Now, my guess is you're going to see some overhead here on the left side, so it's going to need to go sideways here. So, I actually, believe it or not, I bought some shares down here on this day because it looked like it was going to turn. After a couple of days it was up a little bit, I got bored and tossed it. And, of course, then it gaps up. But, again, it just points out the tactics that I use in this market are way different than I have in the past. And I think that's been the key to success. So you sort of have to think way outside the box. Are we ever going to return to normal markets? I don't think so. I don't think anytime in the near future, because I think QE is here to stay one way or another. And that's just the way it's going to be. And so the markets are going to continue to be strange, and it's going to be difficult going and sledding, and I think you're going to have to be very opportunistic and probably take an active, nimble approach. Even IBD a couple of weeks ago pointed out that in this year you needed to have more of a nimble approach rather than sitting in leading stocks too long, position building your way into a big position so it can roll over and blow to 15-20% to the downside on you. So I think that's going to be the way to go in 2014. And I think being opportunistic is key as well. Finisar is a name I like, and I have liked. They announced yesterday after the close that they're buying some dink company for $20 million, and the stock started to go up. My thinking on this morning was, first of all, I'm buying it down in here. So I'm buying it along the 10-day a couple of days ago. I'm not buying it here. I'm not buying it here. I'm buying it when it comes into the 10-day, and then it runs up. You're going to have some overhead from the left side. So it almost seems like you could use a 620 chart to unload it and take your profit. And so this morning I'm watching it, and once it starts to roll over, I figured that it's going to need more time to build a handle, because you basically have come up the right side. Unless it's going to launch from here and head higher. And today's news about the buyout of some other little dink company was going to be positive, I would have thought that the stock would have gone higher. So it starts up at 25. As soon as it starts to roll over around 24, I'm looking at it as bottom low 23s. Just above 24, I'm thinking, okay, kiss it off. It's going to need more time. So let's see. Let's look at some others. That if Yelp's another one, still up today. Here's another one. You had some pocket pivots. And Yelp's, if you've traded Yelp, and I have to admit I've messed around with it many times, trading it up and down throughout the base. And some days I made some really big money in the stock. Some days I didn't. But you could trade the volatility in the base. And you had some pocket pivots of like one here and one here in the pattern. But notice how the pocket pivots, if you're buying into the pocket pivots, the next day, boom, they knock you down. And you buy into this pocket pivot, it goes nowhere, then boom, they knock you down again to the 65-day exponential. But when you come down to that line, a lot of times that's where I'm thinking about buying a stock. You know, I'm sorry, but 50-day you can go take a hike. To me, I'm using this line, and I'll continue to use it until the market proves to me otherwise. And it works. It works in a number of cases, actually. And in this case, you know, you have the strong action. Now you have the weakness. So strong action followed by weakness. Come down to a logical area of support in here. I'm a buyer. Okay, it moves up again, pulls back a little bit, forms a little tiny handle. You're drawing up in here. You could even just wait it until here, because you can see this is setting up. And as soon as it starts moving on this day, you could jump in, and the thing is up, you know, 10 or more percent in a couple 3 days, and then you blow it out. And you just keep doing stuff like that, and you don't really buy into the strength heavily on the basis of the strength, because we already know what happens in this market. They suck you in on the strength and then yank you back down. So you're better off looking for leading stocks and trying to find the logical points where they can be bought into weakness. Anyways, let's see what else is looking interesting here. Oh, I want to talk about Twitter because I'm just tracking this. And I thought yesterday you undercut the low. You have this big run-up, and it's a crazy run-up, okay? But you could have bought it in here. It was an IPO U-turn pattern. Talked about this a lot. The thing went nuts to the upside, and you can see you have the biggest volume on the upside at the peak. So right there, if you're trading the stock, you can tell, like, okay, they just rang a bell and told everyone to jump into the pool, and everybody just jumped into the pool. So once everybody's jumped into the pool, there's nobody left to buy the stock, and you start coming off. Now you come down in 2 days hard, and you undercut this low.
JPM.
And, whoops. That's pretty loud. Well, I'll look at that later. But anyways, you come down hard, you rally, and then you gap up. 3 days of volume picking up. Last day, you get like sort of an abandoned baby island top. You know, diving sunrise or sunset, this or that, I don't know. Anyways, thing gaps down. That's actually a short signal there. Thing comes down, undercuts these lows. I thought that this could be buyable possibly on the pullback below this low, which is 58.57, and that it would have started to rally. So yesterday, you know, it comes down here, it undercuts, and I buy a few shares. And this morning, we're starting to run up. So my thinking was this thing needs to come up off of here and hold. It couldn't hold the 20 days, so I'm gone. I make a small profit, and, you know, that's end of story. So
Yeah, I also wanted to point out what I loved about this pattern is it's pretty textbook when you get this big run-up, and then you have a gap down off the peak on volume. If you look at the way the thing was trading at the open, first of all, I mean, it's gapping down something like, what was it, 8% or 7%. And in context with the chart, that's a serious consideration to say, okay, I'm going to dump my position or at least sell half of it. And then when it does bounce, it bounces pretty anemically, and it's a very sharp, you know, we talk about V patterns that are quite unstable, and it forms a classic V pattern. And so if you didn't get out the first time, you better get out when, you know, you've got the second chance to get out, which is, you know, right around 67, 68, maybe even 70.
yeah, and that's pretty much it. So now we're just looking to see if this thing tightens up and sets up in a base. But, you know, I think Cinderella already came and went on this one. Maybe she'll show up one more time. Remember, Cinderella rarely comes more than once, and when she does come twice, you have to remember that she only has 2 shoes, and so by that time she's out of shoes. So in this situation, you know, maybe she shows up again. The way I look at it, Cinderella came once on this breakout. You got another second coming of Cinderella, and that may be it for now, but this thing's getting hammered. It's not holding any of these lows, so I just back away from it and leave it alone. You know, I don't think there's any money to be made here in Twitter unless you're going to flip it for $1 or $2 intraday and you catch it right. It's just too erratic now at this point. Let's see. Should we do some questions? Let's do some questions. Groovy, says somebody. Yeah, I love that Fifth Dimension song. I think it's hilarious. I do remember my mom being very much into the Fifth Dimension in the mid-'60s, late 60s, and she had a number of their albums, and so they were all floating around the house. And that was my favorite stock. Somebody asked me, when are you going to play us a few licks? I don't know, my guitars are all hooked up to the amps downstairs, so that's where I've been limiting my noise-making activities to. Anyways, Biogen, gap up here, slow stock going sideways, finds the 10-week moving average, and bounces on a pocket pivot to the top of the base. So you have the pocket pivot here. Myself, this kind of wears me out, and by the time we can't really get anything going after these two pocket pivots in here, to me it seems like, go somewhere else, which is okay in this market because there are plenty of other places to make money, but it does turn and go. So, but on a percentage basis, what is it, a 5% move? So, and it's still in the base, and earnings are coming up. Splunk, you have the Bible gap up. Splunk is doing what it always does after Bible gap up. It goes nowhere, but you could have been long the stock on the basis of this pocket pivot, and then it tucks right into the 10-day moving average. So you could have bought it there and then got the gap up and sold into the gap up. That's the tactic I like to use. I don't see any reason why I need to be chasing strength, and I won't. There is one thing that is in the back of my mind, is that suddenly we see all these nice growth stocks moving and breaking out of bases. Some of them are coming out of late-stage patterns, and I'm wondering if they're setting up to fail on a bunch of these breakouts. I mean, so far they're working, but I take a short-term view and a swing trading view here and bag my profits here, and then try to sit through a pullback and see what sets up again. Now, I'm just wondering if this could be a scenario where they do top the market with all these breakouts. So this is just one thing to keep in mind, and also why I don't think you need to chase abject strength. You see something acting well, wait for it to come in, and wait for it to come into an area where you can get some logical support rather than chasing. Chasing is not good. So, you could say, yeah, you want to buy this one. Low here at 73, that would be your stop. You're about 2% away from that. Somebody says you confuse your 65-day and 100-day in Taser. This is a 65-day exponential right here. There is no 100-day in Taser or Yelp. And here's Yelp. Here's the 65-day exponential right there. So not sure what you're talking about there. Anyways, Dr. K. Dr. K, are you there? Are you there still?
Yeah.
Okay. Here's a question for you. Are you ready?
Yep.
Okay. Get in the ready set position, please. Okay. Any studies?
I'm gone.
Any studies to indicate whether the high number of pocket pivots precede an advance or decline in the market? We have had more pocket pivots in the last 5 days than in a very long time. Yes, I would say a veritable blizzard of pocket pivots, to go with some of the weather we've had in other parts of the country, but not here in California or in London. But Dr. K, what's your take on the number of pocket pivots?
Yeah, when you have high-quality pocket pivots, you have a number of them. The greater the number, that just simply means that the market has spent enough time either consolidating or acting in a way that's constructive, so that you can get quite an unusually high number of pocket pivot buy points. So naturally, that's a strong place to be. You want to have you want to be exposed to the market in that situation, and even be well into margin. That's how I usually do it. I've seen enough pocket pivots, and I'll just start buying. Buy up, and let the stocks tell me how exposed I want to be to the market overall. So this is one of those times when it's good to be exposed to the market, and then let's see what happens. But we are in a long time, quite an uptrend, and but keeping in mind that it's not the easiest uptrend to play, because a lot of these names have to be sold into strength. They often don't go very far before they roll back over again. So being aware of that kind of market, the kind of market environment we're in, is very critical. But nevertheless, we're having a lot of pocket pivots. Maybe this means, it wouldn't surprise me to see that we have something a bit more sustainable on the upside, going, into this new year.
Yeah, and I think pocket pivots actually have given you an advantage to start the year out, because if you saw some of these pockets that were showing up in the bases in Yelp, say, for example, YY, for example, Solar City, even is Canadian Solar was getting tight in here, and it was starting to flash pocket pivot volume levels early in the day last Thursday, first day of the year. That was when all the solars were getting moving. And, you know, you could have jumped on this right away and before the breakout, and it's had a nice move. Now, it's extended like everything else, and it needs to pull back. So where you have pocket pivots where a stock has already run up, obviously you don't want to be chasing them. But theoretically, a lot of pocket pivots in bases showing up, and I think you saw a lot of these showing up, a week ago, are usually a good sign telling you the market's likely to move to the upside. And but now, you've got a whole bunch of them occurring. If the stocks are extended, then I don't think you want to be sticking your neck out too far. But those early entry points with the pocket pivots, I mean, they work beautifully in a number of stocks. And, even good old Organovo, which had this little pocket pivot right there. And that's where you want to be buying the stock. If, otherwise you're looking for pullbacks. Here's one the other day into the 10-day. And that's really where you want to be buying this thing, not when it's up. And my guess is it might need to form a handle in here. You're noticing on the weekly chart, right now you're near the peak of the weekly range, which is constructive. We'll see where it closes over the next couple of days. Market could come in a little bit. My thinking is with a lot of these leading stocks extended right now, the potential for a pullback is definitely a strong possibility. Here's Workday, another one that's rocketed up, once it moves. But you had pocket pivot in this down here. I actually thought this thing might pull back a little bit or needed more time, and then it fooled me and took off for a 2-3 day run, well, actually a 2-day run, and now it's sort of backing in, which I think it's entitled to do. It could come all the way back to the buy point for all you know. But again, the pocket pivot would have given you your best early entry. And I think in that market, that is what you're striving for. And the tendency, I think, for a lot of traders is, you see the pocket pivots when they happen, and I'll do this as well, and then they go nowhere, and you're like, it's kind of boring. And then finally, boom, it starts moving. But I think the key is getting in on this, and that's really where you want to come in. And then maybe give it a little bit of room, and then once it starts moving, you could start adding, as soon as it starts breaking out to your position, and then riding the run-up, and then maybe selling some into that, And that's the way I handle it. But I think there's a requirement of, say, just a couple days patience with stocks for the most part. Someone says Twitter seems like it needs a lot more time. It does. It needs a lot more time. It's going to have to settle down. I was thinking it was triangulating around the 10-day, and so it might tighten up in sort of a pennant-type formation thing. But no, it's not. And this is what you look like on a weekly chart, and that's kind of grim looking. This thing needs to settle down now. It's lost all reference points, so we're kind of 55.82 and plummeting. Let's see, Kiwi. This isn't the stock I play. It's kind of thin and squirrely. What's your take here, Dr. K?
No, it has obeyed the 50-day, so if you're taking a longer-term approach, I mean, you could use certainly the 7-week rule on this because it tends to violate the 10-day moving average routinely, but it does hold to the 50. So if if you bought this earlier, there's no reason why you need to sell it here. It looks like it's getting some support, and again, it is a thinner name. It's going to be a little more volatile, but if you're in for a longer-term approach, then you're probably sitting on a good profit. For instance, if you bought it in the 30s, and sit tight. We're in an uptrend, and this thing looks like it obeys the uptrend.
Yeah, if you're up on it, you're doing fine. No reason, but there's no buy points in here that I can see. Maybe you had pocket pivot right here, so it's well above that. Almost 20%. How serious should we take the Cheech and Chong stock MDBX? Medical marijuana seems to be gaining traction with New York announcing support after Colorado. Actually, my favorite stock is MJNA. I bought 1 million shares at 2 cents here on this pullback, right here on the pocket pivot, and it's up now. It's doubled, so I've made. How much have I made, Dr. K, on that 1 million shares of MJNA?
How many did you buy at a penny or
million?
A penny?
A million at 1.13 0.01.
So you bought 10,000. So you doubled your money. You tripled your money. So you made 20,000.
No, I bought 1 million shares. What did I? Let's see. I don't know. Let's see.
Oh, you saw, yeah, done. Okay, they made 200 grand.
Yeah, there you go. Hey.
If you had sold at the top there.
I think it was the news that they were selling out of pot in Colorado. And I think it's funny, all the potheads on the planet are going to come out of the woodwork now. Wait till they legalize it in California, then the lines are really going to be out there. So, but what's the other one? MDBX. Oh, this is you know, these are just look at this thing. They're trading at $10 a week or so ago. Now you're at 48. Yeah, I don't think I'm gonna. I think this is classic penny stock craziness, and these stocks are thin. It doesn't take a lot to run them. I don't see any reason why I need to get involved with these now. I think if these are viable businesses, they'll start to show the usual characteristics that we're looking for. But again, I think there's a lot of risk with these names because even though the states are legalizing pot, it's still illegal on a federal basis. So you're violating the federal laws. So they could come in. There could be wrangling over that between the feds and the states, and that could cause a lot of volatility. So if you were smart enough to get in early on these and you made $40 or whatever, I don't know, you could take profits and then see where they go from here. But not anything I would be playing here. Somebody says, Gil, would you consider C-Trip to be a potential UGD? A UGD? What's a UGD here? I don't know. Is that, you mean an SG, like a shortable gap down? Well, I don't see it gapping down, but I'm not going to short the stock here. It's already down a fair bit. Looks like I don't know, is that a head and shoulder or just a failed base? Looks like a failed base. But I went, it's too far down, too extended to the downside. Someone says, thank you for extended warning on many stocks. Save dollars today. Blah, blah, blah. Well, I'm just a general strategy. I've been trying to figure out how I can define it into a coherent strategy and have a webinar on what I've been doing, but it's not that easy, and it's a little bit crazy. And I'm using heavy margin when I'm right and I've got things moving in my favor. And on an intraday basis, and a good chunk of my positions are only intraday positions; they're not even held overnight. If I go 400% long intraday, there's no way I can hold that overnight, so I gotta back it down to at least 200 or less. And in this market, I don't really like to hold too much overnight because there are just too many overnight surprises. And I think you guys know what I'm talking about there. But if I can, to the extent that I can explain it, I do on the webinars here, and hopefully some of you are catching on. But as far as I'm concerned, a profit in hand in this market is definitely worth two in the bush. Let's see. Is buying a Bible gap up chasing in this context? No, because if you're buying the first day, because even with a Kihu, if you're buying on the first day on this gap up, the low is 85 even. So that's your stop, and you might give it. My thinking on most of these is they should hold up pretty well, even at the wild thin stock like Kihu. I would just probably give it to 85 and blow it out real quick, with the idea of coming back in if it goes back above 85. So, but I'm willing to go back and forth in rapid fashion, and not many people can deal with that. But if you're buying the Bible gap up on the basis of the Bible gap up, you know where your stop is, you use it. So that's not extended. What would be extended is if you are buying, here's the Bible gap up, and you're buying this up here, you're chasing it. I would even say, given that 50, roughly, what is the low here? 49.60 is the intraday low on the gap up day. If you're buying later in the day, above, I'm going to say 54, 55, you're chasing it. So you're putting yourself in a riskier position. This stock, to me, you had to buy it on this day, and I actually even pointed that out after it had done this. You come up to the top of the base, look for a pullback, you buy into it. Of course, here's the ugly duckling theory. A stock comes in, volume is above average, holds right along the 20-day and the 10-day, which is even right across this area, this low base top here, or high, whatever you want to call it. And it holds that, and then the next day, boom, it's off and running. You could even bought it in the morning. I mean, we put out that alert early in the day, right, Dr. K? Like, in the stock, as I recall, was trading around $50.
It was actually, it had moved higher, then it reversed back down. It was trading pretty much close to the low of the day when we sent that report out.
Yeah, and
So we got some, you know,
it.
emails from people who actually bought it at that point, like around 50 or under 50, and they were quite
Right, and
quite
you're
ecstatic at the trade.
20% 2 days later, you know, and bingo, there you have it. And I'll bet you now the stock's probably just going to go sideways for a period of time, or even come in real hard. You can see the I've got a 5-day moving average on this just for fun. I know stocks that start getting really accelerated to the upside will follow that. If you look at Twitter, you can see the Aqua 5/8 following it roughly, but when it starts to bust through it, now you're starting to get, you know, to the extent of the run, I think. But the 10-day on FEYI is now, where is it? It's just above 50. So, you know, might need some time to catch up and then see what this thing looks like when that occurs. But in the meantime, you know, take your profit. In my view, you take your profit here. Even if you bought it here, if you bought it here, I'm inclined to take my profit up in here. But if you bought it on the viable gap up, I'd be inclined to take my profit up in here and just, you know, sit back and wait and see where it goes. Gil, do you think we will see more pods develop if this is a top? I have to. Well, I'm assuming if in fact this is a market, you're going to have a market top, okay? I'm not saying we're having one now. Maybe we are, maybe we aren't. We'll know in a while, but that would tend to coincide with a lot of topping patterns showing up. So I think you'll see all sorts of shortable setups, including head and shoulders patterns, pods, late-stage failed bases, etc. So they'll all kind of show up together. So the interesting thing is we haven't seen a lot of those. They start to look like they're going to top, but they don't. And so you know, I think it's really a question of when we really do start a major move to the downside. Dr. K. You there, Dr. K?
Mm-hmm.
Okay. How's the weather in London today? Is it warm or cold?
It's been unseasonably warm the whole time.
Okay, so
It's really weird. It's great. I mean, it's just great. It's just light jacket weather still, and
Cool.
you know, it might stay this way.
So London has global warming. Most of the U.S. has global cooling. So hopefully
Central London has its own ecosystem, so I've never experienced a harsh winter in London ever. Being a weather wimp, you know, from California, and I got to say, you know, Central London, stay in Central London, and you're shielded by all the warmth of the buildings.
Right. Well, here's a question for you. If 6 or 7 distribution days does not mean a cash or sell signal, since we are in a QE market, are there any objective rules on what now triggers a change of signal?
Yeah, well, as I've said, the model has adjusted to full-bore QE earlier in 2013, meaning that just because the markets and leaders look like they're falling apart, unless there's really concerted selling pressure, it's not going to go to a sell signal. Then that explains why it has not had a sell signal since August. Also, it tends to stay on its buy signals longer, therefore it's able to, you know, stay with the trend for a longer period. And as far as, you know, what is going to take it out of its current buy signal, it's the same thing as always. We need to see some sort of substantially increased selling pressure on the part of the major indices, or more likely what we see is a jerk to the downside, but then continued instability. What usually happens in these QE environments is when the market finds a floor, it dances around the floor maybe for a little while, and then it does regain its footing. We start to see that in leaders as well, and so there's no reason for the model to switch out of its buy signal. But in more pronounced selling situations that we've seen in prior years, it's pretty obvious that the model should be out of its buy signal, at least in cash.
I have a question for you, Dr. K. If you're giving the market direction model more room, say on either side of the market, on the downside, does this mean then that you may be down more before an actual sell signal is issued than you would normally?
Yeah, that's correct.
Okay, so that is one caveat in terms of managing the risk.
Yeah, there's going to be there's a little bit more downside risk simply because we want to give things a little bit more space. You know, but then on the other hand, there could be potentially the situation where we get, say, a high volume reversal off the top, in which case is a very, very low risk in the model switching out of its buy signal at that juncture. and then if it's wrong, it'll just go back to a buy signal when the market resumes its uptrend.
Okay. Someone's asking that I had mentioned the possibility of conducting a session on how I prepare for the market each day and weekend. Well, I've been thinking about that, and like I said earlier in this webinar, I'm trying to figure out exactly how I can put it in terms that people can understand. My preparation basically involves using HGS Investor software. Okay, that's my primary tool. I run screens during the day using O'Neill stuff and other programs, but my bread and butter program right now is the HGS Investor software, and I have that chart view that I use that I pointed out. It's available on, if you go to the HGS Investor website and you use the program, you can download the chart view. It's called Gill's Secret Weapon as an add-on. So it's out there, and I use that. And I'm going through lists of stocks, boom, 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 and being visual, and I think Dr. K is visual as well. I pick up things by seeing patterns and going through things very quickly, and so things will become evident to me, and some of it's on a subconscious level. It's not necessarily something objective or some process where I can demonstrate it in a webinar, or someone emailed me the other day, gee, I'd love to be a fly on your wall. And my response was, well, you'd probably be one hell of a confused fly, because you really won't be able to see what I'm doing. I pull up a screen, you see a flurry of my fingers typing the orders in, and then going back and forth all day like that. I'm not sure what anybody's going to pick up from that. But the real key, I think, to understanding the markets, I think this is what everybody should be doing on a regular basis, is looking at as many charts as possible. So if you got your buy list, and my buy list right now has about 150 names on it, which is telling me something also, because when my buy lists get to about 150 names, historically, that's been where a market top occurs. That many stocks looking good. And so I watch it, and then when my buy list gets tiny, 50, 60 names, a lot of times that's where we get to a market bottom. Sometimes, maybe 10 names on the buy list, and then you're really at a market bottom. I think that happened in early 2009. Anyways, so I don't know where I'm going to go with that, but again, it speaks to the idea that you think I do something magical every night to find the stocks I'm looking for, and it's just elbow grease. It's just going through as many charts as possible, training my eye to see certain things, also trying to recognize shifts in these patterns that I see as I go through a lot of charts based on what the market environment is, and it's what helped me figure out what might work as an approach earlier in 2013 versus position building in the old ways I used to do stuff. I can tell you way back when, for those of you who ever used daily graphs, the printed books that used to come out, back then I lived out in Whittier when I was starting as a broker, and I would drive out all the way to Marina Del Rey, which is now roughly where I live, and go to the O'Neill offices on a Saturday morning, and they'd open up at 9, and you could get your books, nice and fresh, right off the printing press, hot off the press. You remember those books, Dr. K. But one of the things I used to like to do was to flip through them like a flip book and look at the bottom right corner or the bottom left corner and just flip through them, and you'd see these. It's like an animation of what all these stocks are doing, and it will give you a sense of what's generally going on with the market. And I think that's kind of where that all started with me, but I think it's developing your chart eye, and we talk about that in the most recent book, developing your chart eye, and that's really the key. That's, and to me, there's nothing I can show you that's some sort of step-by-step method. It's something that you have to develop and a skill you have to acquire over time. And again, to get there, it's elbow grease. That's all, right?
It's absolutely. I mean, there's no black box. I mean, there are black boxes that work for a little while, but they have to be fine-tuned and adjusted constantly, if they're going to stay with the market. And that the whole point in developing your chart eyes is so that you can notice the subtleties and changes with leading stocks and major averages as they occur in real time. And in other words, there's no substitute. There's no get rich quick, as we've always said. It takes a lot of work and dedication to stay with the markets and to see the subtle changes that do occur. And when you do have a material change in the market that does occur every blue moon, then you can adapt to that. And market direction model, which I've been working with for many years, certainly has been able to to do that at some critical junctures. The most recent one, well, being last year, but then of course in 2009 it adapted to QE very quickly, which is how it was able to outperform I think most all models out there. At least that's what Frederick was telling me, based on the top 5 models that were around at the time, the top five performing models, 2009, 2010, and it was able to hit the downsides too. It was able to get the flash crash of what was that, May of 2010. And then in 2011, after a very choppy sideways 6 months, it was able to get some very quick profits because the market was very volatile and was able to stay with that rhythm. So last year, the market's always going to throw us new challenging years that we've never seen, perhaps in 50 years or in our trading careers. And last year was one of those years because it was just so largely manipulated by more QE flooding the system than ever before. And it took a lot of models. Well, the trend following wizards, I think, are a great example where they've got their own models and their own. Some of those guys are black box, but they are always staying in step with the market. But last year was another year that they underperformed. I think they finished down for the year. And so it speaks to the challenging nature of what we had last year. And the markets are always going to throw something new at us. It keeps it fresh. It keeps it interesting. And it's important. It's key to developing, burning the midnight oil, essentially, and developing your chart eye, and also just developing more of a sixth sense, second nature for certain things. Gil said a lot of this is perhaps at an unconscious level. This analysis and the sizing up.
Subconscious. Unconscious is after 4 martinis.
Yeah, exactly. So remember that part of our brain is really perhaps 80 to 90% of the horsepower when we're doing things. Whether it's learning to play an instrument or writing a book. It's not our conscious mind that is really the driving force. Being able to exercise that subconscious in a very critical, productive way is key to being best at anything.
I love this chart. Someone just mentioned this symbol here, tequila, Montalvo Spirit. I once lived on a street, Montalvo Avenue. That was in Redwood City, up in the hills of Redwood City, for any of you familiar with the Bay Area. But in any case, someone's asking me, that's a value play, I like it. Finisar, does Finisar qualify as a 620 cross? I think it's kind of a funny question because, Scott, is that you asking that question? Let me get, where's my 5-minute chart? Here we go. Let's go to Finisar. Well, what do you mean qualifies as a 620 cross? I mean, you got the cross here. Does this mean that things going to turn around and go higher and you need to load into it? I don't know. I'm not inclined. Right now, I'm inclined to lay back and see how this pullback occurs, because I think right now, are we trading heavier volume right now, Dr. K? What are we looking at here?
Let me see.
Yeah, you're trading heavier volume. You picked up to heavier volume on the NASDAQ. So, and everything's extended, okay? You had your move over the last 5 days. If you're getting all excited about everything now, I'm sorry, but you're late to the party, and you run the risk of the police showing up, at least in the short term. They might get the party going again tomorrow night, but you're going to have to wait for that. But, does it qualify? I mean, there's a 620 cross. Does that mean if you wanted to buy it, I guess you could buy it here and maybe use the low of the day as a stop if you want to try and pick it off there, because it is coming in. Whoops, let's see. Let's get this out of here. It is coming into the 10-day, which is where I thought it was viable before. But again, strength in this market doesn't always beget strength, and you have to be kind of wary of this. This looked good, but it may need to go sideways, build a handle. So, I'm not sure what you mean by qualifies that it's a 620. They had to fill out an application, and we'll let them know in 2 days if Finisar qualifies. I don't know, but right now, that's one way to approach it. But right now, I'm inclined just to kind of hang back. I throw out a couple of shorts in here. I think First Solar is a piece of crap, and is probably this gap down to me is a shortable gap down. I'm looking at this as a flag to the downside, and it's ready to go lower. That's what it looks like to me. So you short the rally today. You notice it comes right up to this 5-day line, but that's neither here nor there. Now everybody's going to start emailing me on that. to me, it's just you short the rallies in this thing every day on an intraday basis since this gap down, and it comes in, and you make a little money, a little Skrilla, as some people like to say on the chat room. And I think that's a short to me, and I'm looking for it. Today I'm going to use the high of the day at 52.85 would be my max upside stop, but I might cut it quicker than that depending on what the general market does. So the other one, LinkedIn, I think might be good for tactical shorts here. You're kind of getting to the top of this gap here. So in the 150-day exponential moving average here, yeah, it might stop here and roll over, but it might also just keep pushing higher into earnings. So that's a possibility. But again, the market's in an uptrend. I'm kind of just laying back mostly to see what shows up on the buy side. Tesla, buyable on this low volume pullback. I don't know about Tesla. Why would it be viable on this low volume pullback? I don't really see. He had this sort of, where was this pocket? Here's this big bottom fishing type pocket pivot thing right off the lows. But nothing really exciting there. It slowly winds its way higher. But if you look at this, this could be a cup with a low handle. It could be a head and shoulders. So I don't really look at it as anything right now. I don't think it's viable. I don't even think I'd short it. Can't borrow it anyway. So to me, but I'm not going to. I'm not going to tell you, oh yeah, you load the boat here. It's a low volume pullback. Tesla's not really a leader anymore. Just like LinkedIn isn't really a leader anymore. And any reaction rallies these stocks have may just turn out to be shortable. And we'll just see how that goes. Okay, Scott says, it wasn't me, it was Nick. He saw the 620 cross. Yeah, the 620 cross is like anything. You show someone, like I remember ascending bases. When Bill O'Neill first talked about ascending bases, everybody saw ascending bases everywhere, And I think there's a lot that's contextual to all that. Now I talk about roundabouts, and now I get emails about this is a roundabout, that a roundabout, and everybody sees these things now all the time. Netflix to me is just a piece of crap a while ago, and I thought that this should have been sold here as it's starting to roll over, because the one thing you'll notice, here's the big reversal, the really ugly reversal after earnings. And this is like the total QE action, because after this you think, okay, it's going to have a little rally and this thing's just going to blow apart, right? But that doesn't happen. Instead, what it does is it looks like it's going to blow apart, suck in some shorts, and then you just kind of march higher, bob and weave higher along the 10 and the 20-day moving averages. But notice it all the way up, and this is for almost for over 2 months. You don't have any above average volume, and finally you get a gap down on above average volume through the 50-day moving average. It's violating today. I think Netflix looks like garbage. They came out with the earnings. I'd be watching out for that. GNC short, someone asked. No, I'm not. I don't know. It's sort of failing here, but you had to short it up in here, not here. Again, I wouldn't be reacting to weakness like this as opposed to trying to short bounces in ugly-looking names. FLT short, nice reversal today. Maybe it is. I don't know, but I'm thinking the closer to the 50-day, if this is going to be a failed base, okay, and that's sort of what it's looking like right now, because you tried to break out here and you failed there, but you have only recently dropped below the 50-day, and you violated here, so it's kind of got that working against it on the upside. So you reverse here, volume is a little heavier this morning, at least this morning my time, and it's coming off. So if you shorted it here, I guess you'd use the 50-day as your tight stop, thinking this thing's going to break from here. When do these guys announce earnings, though? Dr. K, FLT.
I don't know if we might rely on...
briefing says February 6th.
I see February 7th, but...
Well, Wanda's going to be wrong. They're perennially wrong there. So
yeah, I would go with yours.
Yeah. So so that's a while away. Gil, the orange MA on Tesla's 150. Yeah, this orange one is a 150-day, and there's a 200. The black one is a 65-day exponential. The blue one is a 50-day simple. The 20-day exponential is this green one. The magenta one is a 10-day simple, and the 5-day exponential is the aqua one. So pretty exciting, isn't it? Let's see. Gilead, ascending base. Oh, someone had to say that, didn't they? I don't really see an ascending base here. Where? One pullback, two pullbacks, three pullbacks. I don't know. Maybe it is. Yeah, I guess it could be. It's kind of, to me though, this is just a base. You know, there's no ascending here. It's just a really flat base along here. It's very tight along the tops here, so maybe it's trying to go higher. Buy a big position and see if it breaks out. You know, you could use the 20-day at 73.65 as your quick stop and just load the boat right here and see if this action is going to make it come out. It is very tight there. That's kind of interesting, but it might also be a general market situation. GoGo, yeah, I should talk about this because I think it's an interesting concept. I still think GoGo is, you know, if we remain in a market rally and everything remains hunky-dory and the you know, confirmed market uptrend, blah blah blah, and all that, I do think this will come out. I think it needs to form a base, and you see you have this pocket pivot here. But see, one of the things to do, and I'll give you a little trick here. I'll look at some of these, and it doesn't mean you can't try and buy it, but you know, if you draw a like you can take some of these things and draw, you know, just draw a trend channel. And usually what I've noticed is when you get a pocket pivot, if you have a downtrend and you make a trend channel, you can do it however you want. You can make the lows, you know, down here, whatever. The key to me is the tops. But generally, even though it's going sideways, you'll see these little pockets show up after it's able to clear the top of the trend channel. So, because it's telling you it's settling down and it's sort of starting to move out of the downtrend, it's rounding out. So, I think in this case, GoGo needs more time, and you can see the insiders are selling this thing and furiously. And it rallies the other day on a pocket pivot, and boom, they clock the thing. And so, to me, I think it just needs more time. I just leave it alone. I like Ant better. Have to admit, I bought Ant down here and sold it today up around 1650 on the high on the breakout, just because of what the general market was doing. I just felt, okay, this thing's up for a few days. This is a breakout, however, so I figure a pullback just under 16 might be viable. But I'm still watching this one, just kind of hanging out. Like I said, I'm not making any big moves here. Just kind of testing the waters on a couple of shorts, see if anything happens, and it gives me some feel for where things might be going. Meanwhile, on the longs, I've taken profits on all these things that shot higher over the last few days, and I'm just kicking back and waiting. I have to admit, being in cash makes me feel anxious, Dr. K. There's something wrong with me? I feel anxiety. It's like I'm not invested. I need to be. You know, I don't know. I'm going to go.
Sounds like day trading itis.
Could be. There's got to be something out there. But I have to tell you also that I've learned that setting my plan up, and I have my list of names that I'm looking at, long and short, every day, and they can either be, you know, one-day trades, intraday trades, 2-3-day trades, whatever. I've got them all there, and I'm watching them, and I just wait, and I wait, and I wait until things look just right. And I've noticed the thing to do is to just wait for that right time, and I've been lucky because most of the time my judgment has been right. But I think
the key really is that you know, if the performance speaks for itself. If you're performing and you got day trading itis or whatever itis you want to call it, there's no problem.
Yeah.
Why is there a problem? The problem is when the markets change and a person continues along the same path and starts losing money and continues to stubbornly trade the way they've always made money. That's the problem, and that's why it's very key for all traders to remain on their toes so they're aware of when market conditions do change in subtle ways, and that will affect the profitability, and they need to be, you know, check your P&L every week and see if they're, you know, go from week to week and see how you're doing. Are you still in your uptrend, or are you flatlining? If something has changed in the markets and you're starting to lose money consistently, then you got to change. Or stay out of the markets. Maybe the markets aren't right for your style. Maybe you got to sit it out for a couple months. That can be very difficult for some traders.
Or a couple of years. Oh gosh, I'd probably go into withdrawals. Anyways, my approach is to figure out what's happening and try to work it that way. But I think good risk management is always a key. In other words, if you do get hit, try to get hit for as little as possible. I mean, I think that's pretty intuitive and kind of dumb to say, but it does hold true. I must lose to win. That's my motto, and I keep that printed out next to my computer screen. I must lose to win. Anyways, do we have any other questions? We've got a big crowd today in the webinar, on the live webinar here. Not a lot of questions. That's interesting. I wonder if people have already traded the viable gap ups or the pocket pivots, you've made some money and you want to bank some of it, that's what I advocate. Let them set up again. I think pocket pivots, continuation pocket pivots, especially give you great opportunities to re-enter hot stocks because in this market, like I said, a profit in hand is worth two in the bush. I do want to go through some more names. I'm watching some action here. Look at Cena is giving it up. But it makes sense because you've seen it get hit off the peak, so where do you want to be in? You want to be in down here, not up here. This almost looks like a double bottom breakout, but it's not holding, and that's not a good sign in my view. Let's look at Ciena was another one. That's a Finisar cousin stock, and it's doing the same thing as Finisar. It had a pocket pivot yesterday, and it's reversing today. Finisar is higher up in its pattern, so my guess is you might try and build a handle here unless you're outright topping, but you don't know any of that yet. So is iCloud dead? Well, I think Intercloud, is it dead? Well, define dead. This thing has had a big move, and it's actually still holding above all these closing highs on the left side of this cup-type base. It was viable down in here, and if you were in the chat room, I actually said it was viable right in here, under 10, when it was pulling, I think it was right here. It was drying up and pulling back here. After this strong move, which obviously you got some overhead up here from all the turkeys who jumped into the stock up here, and so it reverses, and it's a little, thinner stock, smaller stock, and that looks normal. That's like an Organovo type move. And it dries up, pulls in, so that's where you can buy it, and it does that a couple of times, gets some support here off the 10-day volume, picks up just a hair, I don't know if you can see that, and it closes at the peak, and then it launches. And then we actually mentioned it this day, and you could have been in it there and caught most of this move. Now you're backing and filling. I think the stock is entitled to, if you look at it here, you're at the top of this big base, so it's entitled to go sideways here for a while. So it might be dead money for now, if that answers the question. Exxon and Trexon, you guys know on the chat room I've been talking about this for a long time as it's been trying to build a base. It's a very compelling company. I'd look into it, but it's definitely extended from here. You had no pocket pivots in the pattern coming around. It's trying to roundabout, but the one thing you'll notice, it's pretty volatile. So I'd like to see this thing settle down. It's got a good sponsorship, lots of good things about it. My urologist was telling me about it back in here, and so I explained to him that, and he was talking about buying it, and he knew all about it, and I said, well, look at this. What you want to do is wait for it to undercut all these lows and blow through the 20 area, and then you can bottom fish it. So he did that, and I was in, last week, right around here, and he's all excited and thanking me for my great advice. And I said, cool, does that mean you're going to refund your fee for fixing my prostate tumor thingy that I had? Well, it was more like just a tumor. It wasn't really my prostate as it turned out, but that didn't work, unfortunately. But in any case, I think Exxon and Trexon, XON, is an interesting new biotech, and it's very interesting. I think Organovo is interesting too. I think you're probably going to go sideways, though. I'd be buying it on weakness down, close to the lower half of the 10s. But I wouldn't be surprised if someone bought them out at some point. Some big biotech sees the writing on the wall in terms of the future of biotech and living tissues that can be used for 3D printing. And the potential applications, I think someone could take them out and go to 20. So maybe there's nothing wrong with hanging on to a few shares on a longer-term basis. But some other stocks that I'm keeping my eye on here, we looked at Taser, LifeLock. You had the pocket pivot there, it comes to the top of the base, so you had to be in on the pocket pivot. X1 had some pocket pivots here, okay, and that moved up, but now you're kind of in an obvious position. This is kind of a big, ugly base, and to me, it sort of has a look of a potential pod, but I don't really look at this as shortable or even viable up here. It's had too much of a run. It needs to settle down and set up again for me. Coors, please. Is that, you want a beer, or do you want... Coors is a late-stage failed base now, and I'd kind of be watching this. Notice how it goes through the 65-day exponential, the black line, and then it has resistance there at the peak. And so, that's looking pretty weak. And it looks to me like it wants to break down, and it wouldn't surprise me because you're late stage in the run, and you're starting to break down. And this is the first time I've ever seen this thing bust. Well, here it did it, really, but it's breaking down pretty hard here, and some heavy volume. Which I think bodes badly for the stock. So if I owned it, you have a 50-day violation, you could sell it on that basis and take your profit if you owned it. So, but I'm actually watching this as a possible late-stage failed-based type of setup. We'll go to some of the solids real quick. Spewer, SunPower, you had a pocket pivot here. It's moved up to the top of the day. Now it's hanging out. So, if you bought it, if you're trying to buy it up here or even up here, you're kind of late. You had to kind of be on these earlier. I'm looking at Amazon too, and go through these real quick because we're just about ready to finish up here. It's having trouble getting through the 400 level, and I'm just kind of watching this one because I think if you saw a breakdown from the 400 level, that would be the inverse of Livermore's century mark rule. So, anyways, that's really all we have right now. I think the pocket pivots that we put out reports out over the last few days have been pretty profitable. Hopefully, you've been able to play some of those and bank some profits here to start the new year out. As you all know, my approach is to play it heavy and play it fast and catch the moves, because you'll notice in this market when something starts to move, you do get a lot of times a nice 2 or 3 day run out of these things, and I've noticed that. So that's one of the reasons I use the strategy of playing things on a swing trade basis. And it worked like a charm in 2013. We'll see how it works out in 2014. And on that, I'm going to finish off with someone's comment. Coors is my kryptonite. It never worked for me. I know, same here. Same here. Someone's asking about Hertz Global. I mean, what is there to ask about here? You have a viable gap up move here. It's pulling in, not really going anywhere, holding the 10-day line. I don't really play this stock. Don't really care for it. So, but I did want to point out real quickly, and this would be the last thing I say actually, Ent, GoGo, if you look at the airlines, Delta Airlines, these AAL, probably UAL, right? United. All these stocks are acting pretty well. Save, we've talked about this, not really going anywhere, but it's a slow mover. Love, Southwest Air, also acting very well. Boeing, which builds airplanes, also making, this is actually new all-time closing highs right now on Boeing, which is very interesting, and it may be telling you that you've got a pocket of strength here, and GoGo and ENT could be beneficiaries of this, and so there remain stocks that I'm going to keep my eye on very closely, and I would do likewise. So these airlines are another story. Love is probably the only thing that has fundamentals as a turnaround situation that I like, but the others are, they don't really meet the requirements of what we're looking for in growth stocks. So anyways, PCP, parts manufacturing, yeah, that's another one that's been doing well. So, you're seeing some associated industries do well. I even noticed Air Lease trying to flash a bottom fishing pocket pivot today, coming off the lows. So kind of something to keep in mind, keep an eye on. I think this might be an area to look at as long as the market remains in an uptrend, and let this little bout of selling, see where it goes, and if and whether it carries further. So anyways, that's all we got, you guys. Thanks for showing up, as always, and we'll catch you next time.
So long, everyone.